Hey man, I'm Jusko from ProbMoney.com. In this video, a little credit 101, we are going to answer the question, how long does a hard inquiry or hard pull stay on your credit report, and how long does that hard inquiry impact your credit score? Now, this is a question that is more often asked by people that are new to credit or maybe have had some past credit problems and are trying to rebuild their credit. Usually a hard inquiry only going to cost you 3 to 5 points on your credit score in the short term, and then that's going to fade over time. But for people that are new to credit, it could be more, or if you're someone trying to rebuild credit and you're really worried about every single point on your credit score, that's something that might worry you as well. So actually two questions there. The first one being, how long is that hard inquiry going to stay on your credit report? And the answer to that is 2 years. After 2 years, the major credit reporting bureaus, TransUnion, Equifax, Experian, going to remove those hard inquiries from your credit report. And then the second question, how long is that hard inquiry going to impact your credit score? As far as FICO is concerned, and FICO is the main credit scoring model out there used by the vast majority of lenders, the hard inquiry is only going to impact your credit score for 1 year. So even though it's going to stay on your credit report for 2 years, it's only going to actually impact that number, your credit score, for 1 of those years. Now you might think to yourself, if the hard inquiry only impacts my credit score for 1 year, why is it on the credit report for 2 years? And if it's only going to impact my credit score for 1 year, who cares if it's on there for 2 years? Well, for the most part, you're really not going to care after that first year about that hard inquiry, except if you are someone that is maybe kind of on the bubble in terms of being approved for new credit cards or auto loans or mortgages, and then also the interest rates that you might get on those auto loans and mortgages, because if a lender decides they want to look closer at your credit history beyond just the credit score, that's when they would be looking at the credit report and potentially see those other hard inquiries that happened in the first year out of the last 2 years. Now, if you have a ton of them in that year and they've fallen out of your credit score, well, then obviously that could make you look a little worse. If you're kind of in the same pattern the year before that you've been in the last 12 months, well, then it's probably not going to make a difference. But that's probably about the only time it really is going to matter that they're on there for 2 years. Otherwise, only impacting that credit score for 1. And again, a hard inquiry, usually not that big of a hit to your credit score, and as we've just seen, it doesn't really last all that long within your credit score. Some people really start to think about these hard inquiries as if they're really dragging their credit score down. That's really not the case, especially if you have some credit history. So if you've got a couple of years of credit history, you're probably getting 3 to 5 points per hard inquiry down on your credit score, and then that's going to bounce back over time. Again, if you don't have much of a credit history, of a bad credit history, then you might see a bigger hit to your score on some of those hard inquiries. Sometimes people say they see hits as much as 10 points, or you just don't want to lose any points on your score because it is low to begin with. But if you're sitting at over a 700, you got a couple of years of credit history, really hard inquiries are not something to think too hard about. Now, I do want to note here that VantageScore credit scores, which are making some inroads, especially in the mortgage market, do handle hard inquiries slightly differently. They will include that information on hard inquiries for the whole 2 years that the hard inquiry is on your credit report, although they say it's really the first few months where it has more of an impact. It's not really clear how much it sort of fades away over the rest of that 2-year period, but those few first months is when you're going to see the impact, and then is going to slowly sort of fade away, and by that 2 years you're probably not really being dinged at all. And then a word about hard inquiries, or hard pulls as they are sometimes called, versus soft inquiries, or soft pulls as they are sometimes called. A hard inquiry going to be whenever you ask explicitly for approval or denial on a credit card, mortgage loan, auto loan, or some other type of loan. A soft pull is going to be when you have not necessarily asked for any sort of approval, but perhaps a lender has looked at your credit report to try to market to you in some way, telling you you are pre-approved for a credit card, or maybe that you could get a mortgage loan potentially for a certain interest rate, that sort of thing. So you haven't asked to be approved or declined. They have looked at your credit report, and now they're kind of trying to woo you to use them for whatever loan product product it is that maybe you would apply for. Now, once you go and apply, if they send you a pre-approval or if you do a pre-approval online, once you actually fill out an application and you say, approve me or decline me, that's when you get to the hard inquiry stage, because now you are the one saying, yes, I do want to be approved or declined, versus somebody just marketing to you and trying to bring you in to their product or service. And then one last word on hard inquiries, because they are treated different depending on what type of loan you are talking about. When it comes to credit cards, usually every time you apply for a credit card and are you asking for an approval or denial, you are going to be getting a hard inquiry. With some banks, if you already have a credit card with them and you go after a new credit card with them, they may do that new card as a soft pull because they've done a hard inquiry on you in the past. But in general, a new credit card is going to be a new hard inquiry on your credit report. When it comes to auto loans and mortgage loans, it's a little different, because there is an encouragement sort of for you to do some shopping around with those type of loans to see where you can be approved and at what interest rate. So when it comes to mortgage loans, you've got essentially a 45-day period where all the hard inquiries that you might have for a mortgage within that period will be essentially bunched up together and treated as one hard inquiry on your credit report. When it comes to auto loans, it can be a little bit different depending on what credit scoring model you're using, but it could be as low as 14 days or as high as 45 days where you would have that same idea of bunching up your hard inquiries. As far as car loans go, oftentimes you're going to do those in a shorter period of time than you might for a mortgage loan. So it makes sense that in some models you're going to have a 14-day period. But still, you're going to be able to shop around a little bit, look at different rates, see where you can be approved, and then have all of those bunched up as one hard inquiry on your credit report. So that's it for this video. Questions, comments, love to hear them in that comment section below. Otherwise, I thank you for watching, and as always, please go to proudmoney.com, where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you're not gonna go to the website or leave any comments below, the next video you're gonna wanna watch is right there.